What's up, friends? It is Monday, August 3rd, as I'm recording this. You may notice I am absent my boy CBO Trades this week. Unfortunately, he is traveling and unable to join us. Was contemplating not doing a pod, but figured I should get something out there for you guys. I know we've talked about quite a bit over the last few weeks, so I wanted to update on some thoughts, positions that we've been talking about the whole 9 yards. Before we do that, as always, please give the video a like, give the channel a sub, and check out the free Discord in the description below. We're talking stocks, we're talking commodities, we're talking everything in there. Even got a little AI channel for you vibe coders who want to experience the wonders of Claude with me. Anyway, let's jump right into things. Last week we had some big things shake out. You guys probably know, if you're watching this, we had the fiasco with Leopold and situational awareness, liquidated or at least bought out, I guess, by Ken Griffin. The market, of course, immediately rallying afterwards. Saw Ken saying that the outlook looks bright currently, so I guess maybe he hasn't sold the bag yet. I think a lot of people, unless you bought some of the levels we were talking about in the past few videos, you missed a bit of a face-ripping rally on a bunch of stuff. I'm sure you guys are wondering, is the bottom in? Do I have to panic by now? Are we basically running back the Iran war 2.0 over here? I have some thoughts on that. I will give you those thoughts. Let's start off with equities. Let's start off with the Nasdaq. First thing I want to bring to everybody's attention is that there's a pretty wide dispersion in equities, in what equities currently look like. That's the Nasdaq, probably the worst looking index. S&P 500 looks considerably better. Even the Russell RTY looks pretty good. I would say it looks totally fine. Maybe a little bit of a weakening here, momentum. I don't know. When I look at something like the Russell, I'm always drawn to these areas down here. I do wonder if we get that pullback. That could be an interesting level to buy down, sort of in the 25 to 27 range. Not particularly interested up here. The Dow Jones also looks fine at the moment. Again, the more we kind of move away from this whole area down here, the more I wonder if price is eventually going to, pull one of these that we just always see from time to time. It's a very repeated pattern. You'll see in price action, you form a high time frame zone, and price moves away initially, these nice like lower time frame structural lows, and then you get a wipe, and then the real move happens, right? This just happens over and over again in price action. And I do wonder if the same thing is happening right now in all of the equity indexes, not just YM, but you can see the same thing, especially I think in the Nasdaq. We are basically trading away from this larger, higher time frame zone that we created, the high of way back last October or so, when stuff started looking a little sketchy, and then we move out of it here in the post-Iran run-up. Now, there's a few things that make me kind of like kind of meh here on the Nasdaq chart. Everybody's very, very bullish right now. I bought some stuff last week. We bought some stuff in the Discord last week. We bought some Oracle and CoreWeave. Fortunately, CoreWeave up 20% today. My God. I don't know if this is a sustainable bounce. I think a lot of people are getting FOMO right now. Let me walk you through what I'm seeing here. First red flag is this move down, in my opinion, hasn't really hit like a significant liquidity draw. And when you get these moments where price sells off and doesn't quite tag a level, you tend to get price bouncing. It builds up liquidity from all the late longers, and then we go in, we wipe that, and then we go. This is just a price signature you see over and over and over again when you trade. And I don't know. I guess you could say, I'm trying to see if there's like an analogous moment here on the chart that I would say is super similar for you guys. Yeah. I don't know. Like this is like a pretty good example of it. Price moves up, you get a nasty sell-off, gets bought up, and then we bounce. But then price eventually comes back and trades into the zone that this move was probably initially targeting, and then you get the very, very big move. So that could look on the Nasdaq like whether that is us pushing up like this, we tag new highs, and then we come back down, and then we go, or possibly we just kind of roll over from here and then go. Kind of sorry, I got a very itchy nose right now. I don't know what's up with my nose. It always itches when I record. I don't have a drug problem, I swear. So, yeah, this is a big level. This range high is a big level, and it's a level that is now chilling with this like major low sitting right above it. And for that reason, I'm like, that's kind of like red flag number 1 to me. Red flag number 2, this monthly candle. I mean, on the one hand, the candle structure is still bullish, right? This is the last bullish up close candle. We haven't broken this candle structure, and so one could say, sure, this is just sweeping out the low of this bullish sequence into an imbalance over here. Generally, a very good setup. I like these setups a lot, where I have a bullish trend and price sweeps out a low of a bullish candle into an imbalance. But there's a couple things about this that are not ideal. The first part about this setup that is not super ideal is that the high has a very clean sweep on it, right? So we're trading into a confirmed sweep of the high here. And the second, as I said, is that the pullback didn't go into anything. It is fallen short of this range high, and so leads me to believe we may potentially be coming back down for another sweep later. I also don't like that the July candle closed below the June low. If we had swept this out and swept out the June low, I would feel a little bit better. But like, to me, when I see something like this, I'm expecting continuation to this low when I see this candle put in. So I don't know. It doesn't have to happen this month, but I would expect this low to get traded before 31K gets traded. That would kind of just be my baseline expectation until I see something else in the price action. Now, things don't look any better to me when we go down on the time frames. On the weekly, this was the candlestick structure. We broke that, right? We closed below right here. So this is a confirmed break of candle structure. We have a change in the state of delivery right here, a bearish retest of that. So none of this looks like a reversal on the 2-week or the monthly. Nothing on the weekly looks amazing. Like, if you want to be kind of a bull, you get happy when you see this hammer candlestick. but it's not like a super high quality one. I mean, I would have felt pretty good about it if we closed back inside this key range low, but we didn't. So I'm just a little iffy on that right now as well. The last thing here that is not quite what you want to see. This is your fractal model set up here, your higher time frame candle. You can see the sweep of the low, but for a reversal to be taking place and for this sweep to be considered like a potential reversal sweep, like you want to see that the sweep was confirmed with a close through these series of down close candles that took the sweep. We don't have that yet. Like the Nasdaq is going to have to close way up here at 29.3 before that's confirmed. So you could kind of just consider this to be a bearish retest, maybe, until proven otherwise. Yeah, I mean, it's worth noting. Like if I just showed, I don't know, I feel like if I just showed you this 5-day candle structure in isolation, you'd be wary right here because you would have a bearish fair value gap right there. Probably something I'm expecting price to reject off of. It looks like we are currently rejecting off the mid-range of that fair value gap. And then this candle, has closed below. So with 3 days left on this candle, I am waiting to see where it goes. And I suspect there's a good chance it closes back below 28.7 and ends up respecting the high of this candle and respecting the fair value gap. I think it's too early to jump on this like Nasdaq bull train, but I will say that this doesn't mean everything looks bearish. One of the characteristics of the market I'm seeing right now is that like stuff looks bullish and stuff looks bearish. It's not like a all one thing, not another thing kind of phenomenon. So there are sectors that look pretty good. Don't have time to go over them here. I will be going over them next in the I got a weekly subscriber video that I do, so I'm going to record that after this and go over the sectors individually to try to see like where we do have some stocks we can particularly or potentially go long on. Right now, just trying to focus on the high level of the equities market and keep you guys on the right side of things. The last thing here that is a little sus is this is the first day of the month after a taco as in like a Trump taco. I generally do not like to just like chase price when it just pumps straight off the open. Very often when you see price moving straight up off like the monthly open, weekly open, daily open like this, it tends to be like a fake move. So if you see an area where price might be probabilistically faking into, which I do because this is the key supply that broke structure, it's the fair value gap. There's this whole down closed series of candles. This is where the daily order flow is. We're trading against that. Nothing here is screaming like long your longs to me yet. It's screaming like, okay, if you bought some of the levels we've been talking about in recent videos, probably take some profits. Probably shave most of the position off, honestly, until the market proves you something. In my mind, I need to see, at a minimum, I need to see the Nasdaq closing back above 29.3. I just don't feel good about it until then. I just feel like 27 and below is probably still back on the table. Let's talk about memory a little bit because that's been like a core thing we've been focused on. By the way, we called the bottom pretty good on Nasdaq. I think I called out this. I think I called out like 27.5 as the place to bid. So pretty good. Probably not the perma bottom. Might be. Everybody's wondering is it look, it looks very similar. I got to tell you, it looks very similar, but probably the worst time of the month and the worst area to be chasing right now, I think. So I'll just leave it at that. Micron, look, I was really wanting to buy Micron. I think I said on Twitter a few weeks ago, you're going to get to bid 750 pretty soon. And it's going to be a great place to just buy and just chill and you make a lot of money. I got to tell you, I don't really believe that anymore. I think if you bought these levels that we outlined and you made money on the bounce, we bought this in the Discord, sold up here. That was a beautiful thing. And then this bounce over here from the 750s, I think it's a bounce still. It doesn't look strong to me. In fact, I'm pretty worried about memory. When I pull up the monthly chart on Micron, I mean, this just doesn't look good to me. I am open to the idea maybe that we could sweep the July low here around 734 and maybe do some sort of reversal off the July low. But I got to tell you, with the way that this candle structure now is, because again, we've closed through and broken candle structure. We've closed through the May low, and this is like a situation where I'm expecting continuation. I think if we were respecting the bullish order flow, we would be respecting the fair value gap. I think this gap should produce like a sweep, not a closure through. So the fact that we swept this low is kind of the root of my we ran the low, we didn't sweep it. It's kind of the root of my bearishness here. And I think that, just from a monthly perspective, what makes sense is for price to go for, I got to move this window. What makes sense is for price to go for the May low, honestly. And that would be wild. That's another 38-40% at least down from here. Even if I'm wrong on this, just the risk reward, the asymmetry is so skewed to the downside at this point, I think, that it doesn't make a lot of sense for me to be buying this, because it's just not showing anything definitively bullish. And I see some really nice places to buy lower. I mean, it's a very nice looking order block down there below 500. I think sub 500 looks really, really good. I think scooping some there is probably my new goal. Be curious how the beginning of the month pans out, because the thing my eye is immediately drawn to is this weekly candle here. This is a weekly order block. So if we have price kind of like consolidating this week, we form like an inside candle, would be a pretty common thing here. The potential for price to basically just kind of sweep the high of this inside candle into this bearish order block and then trade down, I think is very high. So I don't know if I want to advocate you guys to short memory stocks. This is some volatile shit, but it could potentially be an interesting trade if the signal pans out. Would basically like to see an inside candle form here. Would like to see price aggressively push up, ideally at like the start of next week, into that kind of like high 800s, low 900s area. and then see like a significant sign of rejection. And I think you can wait for confirmation if you do want to be a psychopath and short. I think you can really let the market show you something, because honestly, if it does, I think there's a long way down to short this, and you wouldn't have to feel like you just caught the Pico top. Again, not saying the short it. I'm mostly saying, like, if you bought the levels we pointed out in the last video, or the last couple of videos, I like selling and looking to buy other stuff. I do. I just, I don't know. Where am I wrong on this? I mean, if we close a weekly back above like 932 or something, it's probably a good first indicator. It's probably a good first step. But like, I don't know, man. Like, market structure on this is also, like that. So you really want to see a strong push up above 1,000 to really show that structural shift there. Yeah. Yeah. I think the bounce levels we called out were good. We got the bounce. I'm not putting myself out there as a memory bull anymore. Strong convictions, loosely held. I'm not seeing what I want to see from price action. Could I be wrong? Absolutely. But no layup trades here. Same thing on DRAM, the round hill memory ETF. Kind of good glimpse into the memory market as a whole. Just looks pretty clear to me that price wants to come down for this $38 monthly low. That's another, excuse me, that's not where the low is. That's the low. It's another 25% or so on this ETF. Does not look amazing. I'm sure if I go to SanDisk, SanDisk is actually a little more interesting because we did get a sweep already of the May low, but I don't think it's come with any sort of lower time frame confirmation. I would still be expecting continuation from this, even though the sweep is there. I mean, this is the bearish zone. This looks just like an underside retest. You don't have a change in the state of delivery to confirm the monthly sweep until you get a closure above 1545. It's a ways away. So if Micron goes to where I think it may go, I mean, that's probably going to mean SanDisk sub 700 as well. At a minimum, I think it needs time. And I will change my tune. I will definitely change my tune above 1700. But until then, look for brighter pastures. Okay, what did I have next on my list here? Okay, yeah, let's talk about Oracle. I tweeted about Oracle last week. I X'd about Oracle. I don't even know what the hell I'm supposed to say anymore. Had a buddy shilling this for a while. Shout out James Rosenthal. Good follow if you're not following him on Twitter. I don't know what his actual handle is. So my bad, James. But yeah, I mean, I actually bought Oracle down here, 141 a few months ago, and I round tripped a 80% gain almost in its entirety. So that was fun. The chart, honestly, still looks kind of AIDS from this perspective. Like, do I really want to be buying this? Where I think it looks interesting, and what I pointed out on X is that, from a yearly context, I don't know, this is bullish. This is a bullish yearly order flow. We're sweeping out the low of a bullish yearly candle. Is this a super high quality yearly candle? Is this a yearly candle I want to take to the all-time highs? Probably not. It looks like a rejection candle. But with that being said, I would think there's an extremely high probability that price comes up here and tags 250. And what I was looking for was a sign of a weekly bottom around here. I think I tweeted I liked it because it's kind of coming down to the 4-hour chart. and seeing what looked to be pretty nice, sort of like ICT-esque accumulation manipulation setup there, where there's your accumulation above the key level, and then I would consider this to be the manipulation portion of things. I could even draw you a nice little breaker block here, which price I imagine probably comes back to at some point, although who knows. This thing is, it's worth noting how it moved last time. I mean, this was the bottom last time and it went quite a bit up. Did get a pretty significant pullback, but it never came back down to this demand until it was over, right? And then it just kind of went through it. So can't tell you you're going to get a clean retest on this, but it's probably a good position to just sort of DCA into, given the time horizon. Again, like I do think at some point it's probably going to 250. A lot of stuff could happen in the middle there, and I'm not at all ruling out the possibility that this rallies and maybe kind of like chills and then maybe even sweeps that low one more time and then goes. Like this would be like a hell of a buy if it were to do that. So TLDR, I guess there's a lot of time here. I do think it's like an 80% gain at a minimum, and in reality, I think it should go higher than this high. Yeah, it's probably a bunch of untapped supply up here that at a minimum it wants to go to. So 270, 280, 290, 300. That all seems reasonable to me. Maybe you want to consider this to be kind of like your origin bearish order block. And so for price to retrace to the mid-range there, pretty high probability. So I would say pretty high probability this goes to, at least 281, but sneaking up here and tagging 300 is I think pretty in the realm of possible. So we're liking the Oracle. Go slow. You're probably fine going slow. Okay, a couple of other things to touch on here before we call it. Let's talk about, what should we talk about? Yeah, let's talk about, let's close this out with a little crypto rant. I got a lot of thoughts on some stocks. I want to clarify those a little bit. I'll be dripping them out over X and in the Discord all week. So keep that in mind. Bitcoin, we had a bit of an issue this weekend. It was a wallet drained, or multiple wallets drained. I think there was some exploits with the way seed phrases were generated. I think attackers used AI to discover that particular vulnerability. They're basically able to just brute force and steal millions of dollars worth of coins. And I don't know, like I posted in the Discord a few months ago, I think back in April, I started really getting into Claude Code and everything this year, and I've been pretty balls deep in this stuff for months, just playing with it all day, and sort of became like abundantly clear to me that this is very much the real deal, and I don't know, it just seems like the worst possible time to be investing in crypto. I had been a big Hyperliquid holder, rode Hyperliquid from $12, $13. Sold it a little early, like 45, 48 bucks, I think. Ended up going to 70. Still a great gain. But like what I told people when I sold the Hyperliquid bag, which I haven't checked out the hype chart in a while. Ugh. Mm. Like I said, we probably come back down to here. I've been waiting on this for a while. I don't know if I'll buy it though. But look, the reason one of the reasons I sold my hyperliquid bag was just that, like, in using all of this AI stuff for I want to say, like, for so long. I mean, look, it's been months, but like I spent a lot of time with it, and it's abundantly clear to me that it's super powerful, and there's like just like a huge asymmetry in terms of like the current attack surface of crypto and like the capability of all this new tech and people's ability to use it to exploit. It's just like, I don't see how there's not the risk of just some golden age of massive hacks. We've already seen this incident with Bitcoin. We saw the incident with Zcash. For those of you guys who don't know, there's an exploit discovered in Zcash, possibly printing infinite coins. Basically, every single DeFi protocol that exists is potentially at risk. Maybe stuff that's like very, very hardened and safe, like Uniswap V1, that type of stuff is fine. But a lot of these like sort of complex protocols we built and like very poorly audited over the last 5, 6, 7, 8 years. I mean, it just seems like a disaster waiting to happen. So I don't know who wants to put the money into this sort of asset class to move the market right now, given the risks that are there. And I don't know as a result why anybody really wants to be seriously investing here, aside from just some like very select kind of interesting shorter term trades that come up. And I'm sure there are some, and I'm sure that more will arise in the near future. But just like the effort required to find like good alpha in crypto right now versus just like foreheading and riding the AI beta in traditional markets, it just seems like such a ridiculous thing to stay with so much energy still focused in crypto. I don't think the bottom is in on Bitcoin yet. We keep bouncing. Everybody keeps getting bulled up. I do think that there's a good chance we tag in the 60s, and that might be worth a trade for me to 74 or so. I do think 74K is potentially on the table here. I just don't see anything when I look at this chart. I don't. It looks really bad to me. It does not look like a bottom. Nothing about this looks like a bottom. The yearly chart is the worst, man. I mean, like, unless this yearly closes in like some very, very, very aggressive fashion, which I do not foresee. I mean, that is what your yearly candle is looking like. And I feel like if I showed you this as a 5-minute chart and said, where do you think you want to buy this? You would say, I want to buy it in this green box. And the green box is, I don't know, 15 to 47K, probably somewhere in between. The yearly low here, 38K, is going to be a very interesting level. I feel like prices, it's going to want to go to that level. This is an interesting spot because this is kind of this is like the low of that ETF launch, right? So it would be kind of poetic to come in and just take out every single person who ever bought the ETF. Everybody who ever bought the ETF is underwater. Kind of interesting to me. At a minimum, this ETF demand is kind of one of those areas that price never quite came back to. And I think there's quite the liquidity draw here at 49K. So I think we're going to go there. And like, look, like, what does this look like? I mean, does this look that bullish to you? like until price just turbo reverses through and invalidates this like weekly imbalance here. I guess this is technically a 2-week imbalance. Like wake me up if this happens. Right? If we just kind of turbo through this area and just push and close back above 77K or so, potentially interesting. I would still say, even if that happens, price is going to push up in here and just probably go down again. Like there's probably so many people up here who are dying to get out. This could take years to resolve. It could quite literally take years to resolve. And you're sitting here watching this, and oh, by the way, CoreWeave is up 42% since Friday, basically. Is that Friday? Is it Thursday? I don't know. It's yeah, last Wednesday. Boom. 42%. Real company doing real stuff, making real money. You know, and again, you don't have this like risk in equities of everything just going to zero overnight. Probably not the case for Bitcoin. Like the Bitcoin core code is almost certainly fine, right? If there's a problem with Bitcoin, there's obviously a problem with a lot of cryptography, but like even still, like all of the Bitcoin adjacent software, like these wallets people are using, this like you know, protect your own keys. Don't leave it with Coinbase. They might like steal all your money. You know, in reality, like these third parties are probably safer. The ETF is almost certainly safer. Coinbase almost certainly safer. Robinhood almost certainly safer, because you're using some private key management software wallet. Like, was there a 0-day exploit on that? I don't know. You don't know. But like, there's a tremendous financial incentive out there for everybody to find these things now, and I wouldn't feel safe like holding any money in any sort of wallet. I just wouldn't. Not any real money. And although the Bitcoin code's going to be safe, like that general vibe, I feel like it's just such a heavy weight on crypto. So why come here? Why gamble here? Why bet on stuff here when there's perfectly good stuff to degenerately bet on in equities? We're going to have stock perpetual futures soon that are sanctioned by the CME, I believe. So that's going to be a whole new world of degeneracy to happen. I don't know. It seems like the play is to just go long like interactive brokers. Go long interactive brokers, go long Robinhood. Well, haven't looked at the Robinhood chart in a while. Robinhood's probably going to be interesting next year, actually. We'll see how this year pans out. But let me see, 6 months. Not like impossible that the bottom is in here, but I would feel really good buying Robinhood next year in this green box. This kind of looks like, if I were a betting man, and I am a betting man, I would bet that this does something like that. So long degeneracy via Robinhood seems fine. Long hyper gambling, everybody betting on everything. Interactive brokers looks good. There's some random stuff out there like Webull. I think CVO showed me this one potentially for next year. We're going to see how this year finishes out. Be curious if we end up finishing with a yearly sweep this year. Yeah, this doesn't look as good to me as Robinhood. Probably stay away from that one. Yeah, I don't like that. But Robinhood, Interactive Brokers, both looking like good buys. Interactive Brokers definitely way more immediately strong than Robinhood. Yeah, Robinhood too on the 3-month. I mean, this looks bearish. This looks high time frame, very bullish. Next 3 to 6 months, kind of bearish. I think we probably come back, take out this candle. This is pretty clear. It's a pretty clear little bearish candle. If we happen to sweep out 125 or something like that, that's probably a good enough. I don't know. We just took out last quarter's high here. Yeah, this looks bearish. This looks like a quarterly sweep, bearish change in the state of delivery. Yeah, I think this one's going sub 60 lads, but we'll see. We'll see if I'm wrong about that. But I do think it looks really good down here. I think it's worth a send down there. This level in particular, like 46 or so, that's the mid-range of this entire sell-off. Has never been tested. So that'll be super juicy if it gives. That's going to be a next year story for us. We'll keep an eye on that. Keep an eye on that. In the meantime, showed you memory's been weak. Mag 7 has not. There's been a pretty noticeable rotation here into some Mag 7 stories. Pretty insane move from the Mag 7 ETF last few days. Nice move there. I think Microsoft has been driving the majority of this. Microsoft basically up 25% since earnings. I really want to buy a lot of Microsoft at some point. Microsoft is interesting to me because they own so much of OpenAI, and I do think there's this future world where OpenAI and Anthropic, they just start like taking over every industry. Like, I don't know, they get so much data in like the biotech world that they just start their own biotech companies. They just start their own software companies. They just start their own everything companies because they have the intelligence, and the intelligence is what matters. They start gatekeeping the intelligence from us, and they keep it amongst themselves and only the trustworthy large partners. How do you get exposure to that? I don't know. I guess you have to figure out how to get some equity in something like OpenAI. I guess you could buy the IPO, potentially some outrageous valuation, or I don't know, you buy Microsoft. Would have been better a couple of weeks ago, but I'm very nervous for the IPOs of Anthropic and OpenAI. By the way, trying to figure out how those are not some sort of generational market top, but God, like if they could just give us down to like 342 ish on Microsoft, what is that? 340? Oh, that would be a great level. That would be a great level. I would mark that one on your charts. That might be a next year story. Might be a next year story. Just not a amazing place to buy. I don't want to buy here. This looks kind of whack right here. Just buying at range highs after this sell off. But yeah, anything below like 345 or so down into this region here on Microsoft got to be pretty freaking interesting. So be keeping an eye on that as well. All right. I'm going to wrap it there, guys. Just wanted to give you some updated thoughts on some of the stuff we've been following, because my thoughts on memory especially have changed. Thoughts on the larger equities market, thoughts on crypto. Hurts being a crypto bear, but it is what it is. Anyway, thank you guys for watching. Hopefully CBO will be back next week. Get that back and forth discussion back. I have enjoyed that. It's been great having another price action trader to talk things. So hopefully you guys been enjoying that as well. One last call to join the free Discord below, the link in this description. Follow me on X, subscribe to the podcast, like the video, do all the things. Thank you for watching, guys. Love and appreciate all of you. Bye-bye now.